Mr. D, very glad to see you. You're welcome, Matthew. Glad you got it. All right, ladies and gentlemen, time to go ahead and summarize the things we've been discussing during the week. Before we begin, though, can you please confirm that you can see my screen? All right, thank you. So, cable, first one. We said that we're looking for pullbacks to the downside after this breakout here, and then we will be looking to join a potential move to the upside. We also said that after this divergence was formed, that would be the high for us to follow. Then the divergence was broken. We have a new high to follow, etc., etc. However, at that stage, I'm following, I can remove this line now. I'm following that zone simply because this is a perfect price action level here together with the magnet zone from the Fibonacci levels. And this is also the middle of this channel. Okay, so multiple confirmations from multiple things regarding that level right here, together with the second possible divergence or false convergence to be formed. I believe we are getting closer to the moment where we will see at least short-term pullbacks to the upside, or maybe even breakouts and continuation up. The way the 1 hour chart looks at the moment, you can see that the divergence is more or less broken. We do see the momentum hidden. The divergence is now in place as well. No higher highs, no nothing. And this is why I believe we're going to see one more push lower, and only then possibly the continuation. So basically, once we break the low, we need to start following for the possible divergence to be formed. So cable remains bearish, and that's why in the beginning or middle of the week we said, yes, we do have signs against, but we saw so many times the divergence being broken, which means as long as we don't have a valid breakout, valid reversal pattern, guys, that thing remains bearish. Okay, any pullback is an opportunity for us to sell, of course, if we get the actual setup for the sales there. Okay, very important thing to mention here. Then we have Dorian. Now we've been following first of all this. Okay, the divergence entries here, if you did trade it, probably delivered, but for me there was no candle pattern right here. Okay, so I can't really say I did trade this move. It was limited, no convergence was delivered, and we saw immediate breakout of this zone. Now this is the part for me which is kind of interesting. We're breaking above the divergence, right, above the highs, and price manages to stay above these levels, the two lines here. So usually the idea is very simple. Protection, if that's the zone, pick the one slightly lower. Why? Because you might be having spikes here. No need to go ahead and get caught inside such situations, but generally speaking, break above. As long as this level is holding, we can assume we're going to continue higher. Right? This is the very basics. We have uptrend, we reach a zone, breakout, holding above, and then when we're looking for the continuation. Nothing crazy about this situation. The next level we said we're going to follow is the 4 hour chart cycle of the 100%. On the 1 hour chart, the price managed to form the divergence this time for these two legs. Okay, and this is where the divergence appeared as well. Now I do find a pattern on the lower time frames. This one a bit too aggressive, okay, because that's not really a pullback in my opinion. And double top, the slightly more conservative idea is right here with the breakout below this one. We have another spike which could have been used as breakout of the low. So if we remove the projections, we can see this is the last double wave to the upside, which means we can go ahead and place the trend line here. And now things become slightly better. Why? Because this way we're going to save approximately 30–40% pips, okay, out of this move. So break below here, step trading. Of course, this is conservative, right? We wait for the breakout of the trend line, pull back, and then break of the previous low provides us with the opportunity to sell. So we more or less win that many pips more instead of waiting for here. And that was basically short-term pullbacks towards this zone. To be honest, not even the trend line, because that's the previous breakout zone for me. So once we reach here, it would be a good idea to go ahead and cash out. Of course, the way it looks, no divergences, no nothing strong push to the downside. You might be waiting for another push to get something like this, okay? But in such situations, I would prefer to get out and cash out immediately, especially if you get 1 to 2, no need to go ahead and fight it and follow up on it and so on. So what do we see now? As we said, the plan was to see the push up and then pullbacks towards the trend line. This is where we're going to decide whether we will be going up or break out and down. The way it looks at the moment, indicators, price action, everything is suggesting that we should be continuing lower. That means this zone again becomes relevant for us, and the closer we get to that zone, in my opinion, it would be good to go ahead and join it. At the moment right here, I don't really have a scenario how to join it, so slightly higher, deeper pullbacks, and only then looking for the actual sales. Dorian, well done, happy with it. Euro pound, that was one of the pairs we've been following. First of all, we wanted to sell here. Where was that? I think it was this high. We got the high, but we never got, well, at least for me, that was not tradable, okay? Why was that not tradable? Because when we're trading inside the ranges, and this flag is more or less a range, right? We are being aggressive. Why? Because this is the very, very short-term bullish momentum, which means you're more or less going against it. When you do that, well, you want to be at the best place at the best time, which means I want to get the convergence, sorry, the divergence, and either attack it aggressively or conservatively. So regardless which way we go, the risk reward, first of all, should make sense, and from the top, most of the times you will be getting that risk reward ratio you're looking for with very tiny risk. I mean, in that situation, look at it, guys. We give it some projection, right? It's not moving straight down, so we should measure it like this, or maybe even like that. But again, the risk reward makes sense. So instead of going with 1% or 2%, you can go with 0.23 and enjoy the same profits if it works. If it doesn't, it will not really hurt you anyway. For the more conservative idea, that's the breakout. And this breakout, as we discussed in the previous live rooms, came approximately inside the middle of the flag, which means short-term pullbacks here, just to slightly improve the entry by a few pips, would be making a big difference. We got the pullback, okay, so I really hope you managed to enjoy that. Afterwards, since we got this breakout here, I was expecting to see some kind of pullbacks and then continuations to the downside. That never happened, so this scenario failed, and we basically broke above the previous high right here, which brings us to the next idea of the double wave. And why that would be the next idea? Because we have an impulsive move here, and we said that possible continuation higher is very likely to happen. Well, the way this correction here developed together with this one was absolutely tricky for me. I did not see it as a pullback. I saw it as possible continuation to the downside. However, it pushed, so this is currently the new scenario I will be following. Second leg to be developed, and the second leg should be a cycle on its own. Basically, this is the part we're referring to. Since the last push, there are no divergences, which means we want this cycle to complete itself as well. This is where we want to see one more push higher, completing it. Okay, the cycle, then divergence, then the zone to be tested. False breaks would be actually ideal of this zone, and then looking for the continuation lower. How do you extend the line without moving it? You double click on it, mate. You hold the shift button, okay? And whatever you do, the line moves locked to that projection or trajectory or whatever it's called, right? If I release the shift button, then you can move it freely. Okay. All right, so that's about euro pound. Dollar CAD. Pound yen, nothing much to inform. We're following the channel, so if you're trading inside the range, well done. For me personally, that was not tradable. We got the breakout of the channel here and push up, bouncing from this channel, and now continuation lower. And in my opinion, if this divergence is about to be broken and that low to be broken, we're probably going to see something like that. Okay, so as long as this zone here holds, one more push lower, clearing stops, confirming and creating divergences, etc., 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 and then possible continuation higher. Okay, so buys in the short term could be something for us to enjoy, probably next week. That would be my plan. And then if we get a breakout, well, you know, they're going for the continuation up. Why? Because we're still moving inside the channel. Daily chart is still bullish for me, and getting up to here somewhere would be nice to complete some kind of double wave and continuation lower. By the way, one trick once again, let me remove that. Could have just replaced it, but anyway, if you go ahead and put now the 61.8, you see what happens. Okay, it brings us much higher. So based on this and the possibility of continuation lower, that means in order for this correction to be valid, we should be getting that current pullback much lower. Okay, of course this is very long shot here, hypothesis, and we're not going to trade that. Just something interesting to follow up when you're measuring and you have other levels in the chart, and how the possibility of fitting might be developed. You're welcome. All right, so we said dollar CAD would be the next one. The only thing for me here was this breakout, okay, and the continuation lower. I was waiting for ABCD to be developed and then continuation higher. The way it developed, however, the sales, okay, they did deliver, perfect, no problem. From this point on, we said possible continuation to the downside in order to go ahead and complete a deeper cycle here, which did not happen. But even that this scenario did not happen, we also said that the buys in this case are not very clear. Well, at least not clear for manual trading and for me. Why? Because attacking here would mean we're still below the trend line, and there is a very strong possibility we're going to see that and the price bouncing if it's not going to break, right? So it doesn't really make sense to attack the buys here. Breaking above the trend line and the high means, okay, we're possibly going to continue higher, but now the previous high is already reached. So that's why I'm saying dollar CAD at that stage, not really clear for me how to join or how to trade it. Overall direction remains bullish because we had a double cycle before that. We did break the trend line together with this divergence, and we said we're waiting for at least short-term pullbacks to be delivered here. On the 4-hour chart, we saw this push, so continuation up anyways, right? But now the high is broken, we have a spike, which means we did not manage to close above it. Possible divergence is forming, and all that starts to remind the possibility of a range. Okay, so let's see which way it develops, but definitely for me this is not something tradable at that very moment. that theory I do like. All right, next one. Euro-franc was also something we've been following, but no setup was delivered, which means we continue to dollar-franc. Breakout, we got bounce off of the level right here, and then this is where it became interesting. We said deeper corrections or parity level to hold. The very thick line right here is parity level, guys. Very strong psychological level. So basically, once the price managed to remain above, above the parity level on that zone in general, it closed above it. Any entry to the upside we said is acceptable with protections below it. The level that I'm actually following here is slightly higher, and that would be, well, kind of a break of the previous high. Okay, and this is where we have a magnet zone. So I would expect to see one more push higher this way or the other way. Okay, dollar-franc remains bullish. Then we have pound-franc. That was another setup we've been following. Dollar-franc weak field. I don't know. If you're referring to this one, then yeah. But you're the expert for this theory, so. Which trend line? This one, the top one? This kind of breakout, you mean? I would be expecting a false break, to be honest. But who knows? Once the price is there, we'll see how it develops. Okay? I'm not excluding this out of the picture, but again, trend line comes first, so this is what I'm focusing on, that zone. Let's see. Pound franc we've been following for buys. Okay, after the strong bullish momentum we saw, we said we want to look for pullbacks and continuation to the upside. We bounced from this channel, which makes the trade slightly more aggressive for me. Basically, price action for me is suggesting bounces, of course, possible continuation even lower here. Based on indicators, we have all the reasons to believe we're going to continue higher. So only conservative entries, and currently the most recent high is right there. 4-hour chart, no divergence formed. 1-hour chart, same story. I'm expecting to see one more push lower like that. So currently pound franc, again, not tradable, but let's be patient, guys, and once we are presented with a good opportunity, we will be there to catch it. Pound franc, all right, then we have CAD, which we said we're looking for this double top. Okay, divergence in place, that's one. Then on the 1-hour chart, this leg or that wave here developed double top, bearish pressure, false break, again bearish pressure, and we said that breakouts below the trend line together with the lows could be considered as a conservative possibility for the sales. Basically, price pushed, bounced slightly, and then with the breakout of this low, In my opinion, we had a fantastic conservative entry. We're not going to talk about the scalps as they were too aggressive, and I don't think this is the place to mention them. However, based on this thing right here, I think we should be seeing the bottom around 82. Okay, that zone. So a bit more continuation to the downside. Kiwi door. After the push to the downside, we said this thing is forming multiple false breaks and possible continuation, well, not continuation, but pullbacks to the upside, and then we'll be looking for the sells. That spike here was caused by the news, and now things are starting to calm down. We do have a false break here, double top, divergence in place. So for me, break below here, and we have entry, conservative entry for the sells. This is one of the zones we need to pay attention to, which currently the price broke and is holding above it. That means it would be actually ideal if we manage to see one more push to the upside. And if we do that, we want to see that zone cleared as well. Let's go ahead and place the Fibos. Voila, you see where 61.8 comes in place. So basically, if that happens, I would be very, very glad, and I'll try to go ahead and trade it. Okay. So Kiwi door, looking for continuation to the downside, and the higher time frames, we've been repeating that for so long. I don't think we need to repeat it once again. It did the same pattern, but a bit smaller before. Not sure I see it. This one maybe? H1. Here? Yeah, I could agree with you. Even though the correction is slightly different, but more or less same idea. And that, if I'm not wrong, was also based on news here, right? And we were looking for this zone and then the continuation. Then we got the breakout, which turned out to be a false break and then continued lower. Same, but different. Indeed. Okay, so Kiwi idea is clear. Aussie Franc was another actually live setup that we call here in the live room. I think it was around this candle, somewhere around here, the 50%. So basically from here we said, let's look for the sells. Why did we do that? Because this trend line misplaced again. That one was broken, the low was broken, and we got the reversal pattern. Push down, pullbacks, we wanted to see this zone, continuation, hidden divergence in place, dropping down to the lower time frames, divergence number 1 with false break, divergence number 2 with false break, and that's why this candle here, luckily it was during the OTR, so we managed to catch it live together, was the entry. And as you can see, when everything fits together, most of the times you're going to get these spiky moves up or down. And as long as your risk reward ratio makes sense, you can cash out literally within a few hours, right? So Aussie Franc also managed to pay good, and I do expect to see the lows at least, which is all 70, 80 zone approximately right here. Then we have Kiwi Franc. I was involved personally in sales since right here, since the very top, daily, weekly charts, all that. Okay, sell. And unfortunately, the news messed up with our plan. The expectation here was for consolidation and then continuation lower, but boom, kicked out the sell trades, the remaining sell trades here. And this is currently not very interesting for me. We have multiple scenarios, which at the moment, I don't see the reason to go ahead and discuss. Let's just give it some time to develop, and we're going to decide what to do probably next week. Then we have Aussie CAD, which more or less delivered the idea of the range. Okay, we've been following possible range and then continuation lower. We wanted to see cycles and so on and so on, but the problem is we got the price here, no divergence. Okay, that's number one. We actually got a close above and no divergence. That means pullbacks, and very likely we're going to see continuation higher. Then we have 5-wave structure. Actually, is that the smallest one? Let's check. 40, 40, 50. So close one, but that could easily turn out to be leg number one, right? And then we can get the continuation. No hidden divergence yet, but we started talking about the possible sells from this range because the 4-hour chart is still suggesting continuation lower. 1-hour chart not confirming it. 15-minute chart not confirming it. Okay, so yes, it did push, but how do you join? No divergences, no nothing. So in my opinion, those are the situations where we need to skip, regardless whether it gives the profits or not. Aussie Kiwi failed. We've been looking for break above and close above this zone here. We got the close above and then boom, immediate spike to the downside. I personally am not interested in this pair. It's just too crazy. Overall, my view here is we're going to see continuation lower because we saw the breakout of this trend line, because there is no divergence, because we broke, held below it, and now we see the continuation to the downside. And that's weekly chart. So unless we start trading above this zone, okay, I'm not interested in the buys, at least not in the midterm. Short-term spikes and scalps are welcome, but overall, I believe we're going to continue lower. And well, not really tradable, guys. Sorry, not really sure how to trade it at the moment. Then we have Pound Aussie. First attempt, which failed, was right here. Basically, what happened is we have a channel, price bouncing from the channel, divergence, convergence, pullbacks. We said we're looking for pullbacks and continuation to the upside. 1-hour chart delivered the same reversal pattern with a close above, and this is where the first idea failed with the break below. We said that the invalidation would be break below this trend line with momentum, and slightly lower we have a level. At that stage we do have false convergence, so let's see if we're going to get the continuation or something like that. Hidden divergence already forming, so I'm not really interested at that stage to trade it. I want to see something more conservative and on the higher time frames. Next would be gold, which is something that we've been following for a range, patterns and ideas. Sell the top, buy the bottom, basically that's the idea. Higher time frames, in my opinion, are still under bearish pressure. I'm talking about daily chart. The last thing we saw there was bearish divergence without any other divergence after that. So I believe we're going to see this consolidation and very likely possibility to continue lower. And from there, to get the bullish continuation we've been expecting. If, however, we get plan B, right? If we get a break above the range with momentum and everything that we're looking for in a range breakout, well, then we can start looking for the possible buys. But at that stage, a range trading, 1-hour chart, 4-hour chart range is what I'm focusing on. Oil is something that failed. We said that we have multiple divergences, false breaks, etc. And the break below should be opening the doors for the sales. it managed to spike above again, which means the protection here would be taken. Did the plan changed? No, it didn't. We still have the bearish pressure. However, this time the breakout below the low would be much, much lower, which is not very attractive in terms of risk-reward ratio. However, after the second false break from this point on, in my opinion, especially if you have a level on your side, divergence attacks very welcome. Third spike, same divergences, very welcome as well. Okay, so this one switches to aggressive entries for me simply because of the risk reward. Waiting for that to be broken, even for this trend line to be broken, doesn't make a lot of sense. We can follow that one, but again, I would be looking for something more conservative in that case. So oil remains bearish. The whole idea here is that we want to see deeper pullback, okay? And if we break above the high, that would be the invalidation. Then we will be following two scenarios, either continuation higher or a possible range. So let's see. Can you please share your thoughts on Kiwi cut? Yes, of course. So that's about oil, guys. Going back to Kiwi cut, possible range and possible breakout. Okay. This is the weekly chart. Expectation was for continuation lower. Daily chart, divergence, convergence, looking for continuation lower as well. However, we did form here triple bottom and divergence. So daily chart currently pushing up. 4-hour chart stuck inside the range, which doesn't show any signs of reversal, at least on the 4-hour chart. 1-hour chart does show such signs. And to be honest, I don't have a clear view. I was looking to trade this thing right here. And since the last spike above, I simply stopped trading it. Not clear to me what and how. Okay. All right, then we go to cotton, which was another fantastic setup we've been following for some time. Just quick update about the targets. That's the level which is almost there. I do believe we're going to spike through it, but we now have a divergence, guys. Okay, this divergence completed. Okay, and again, all the levels are pushing lower, but in my opinion, it would be a good idea to just go ahead and cash out at least some small portions if we did not do it yet, and then enjoy the rest of it towards the zone. So cotton, very, very well done. One more thing we've been following is the FTSE bounced off of the good level here. We said short-term pullbacks are now expected. Divergences, breakout, reversal pattern, pullbacks, continuation to the upside, and this is where we said we want to be looking to cash out. Actually, that was the place based on this divergence, right? So short-term buys here were also rewarded, and that's actually all. Questions, guys? You're welcome, Tico. Wonderful. Thank you, guys. You two have amazing weekend, and I'll see you next week. Cheers.